think we're good. So, Finance Committee, right?
Fantastic.
All right.
So,
Before we start the Finance Committee, which I am envisioning will be a very brief committee meeting today. You don't have a lot of money, there's not a lot to talk about. But I do want to just talk about some meeting logistics if we can. So we use the owl setup here, the two towers in the middle of the room. People need to talk into the owl and speak up, enunciate clearly, or else it comes out very garbled, and folks watching this are not now or later will not know what you said. The other thing we have to be very careful about is having one person speak at a time, because it confuses the poor owl. It doesn't know what to do if there are multiple people talking at a time. So that's my meeting logistics. So I sent out a Finance Committee packet either very late or very early, depending on when you look at your email. I have the normal agenda items. When we look at an agenda review, one of the things I want to just point out is I handed out an updated accounts payable list. This list includes an additional the reimbursements for our executive director, who was so worried about getting everybody else paid that he neglected to put in his travel expense, and then a few things that he purchased for the office out of his own pocket that we need to reimburse him for. So we're going to be working off the updated payables list when we get there. Is there anything that I missed on the agenda, or that you'd like to skip, that we'd like to take off the agenda? No takers, okay. So let's start right in then. We're gonna review our invested funds. I put in the background a newsletter that came from First National Wealth Management that talks about the environment, you know, the financial environment. I will say that I haven't spent a lot of time with this at this moment in time, because we are really moving to more of a cash position in the portfolio anyway. So that is there for your reading pleasure. And if you have questions or concerns, you let me or Mike know, we can make sure to get you answers, or George might just know. So when we look at our actual portfolio, you will see, and that is a that's the lovely pie charts. We have a total invested as of the 12th of July. So these numbers are going to differ from the numbers that George provided to us just because of timing. But as of July 12th, we had a total of $3,124,853. Of that amount, $146,000, $146,858 was cash. So one of the things that Mike and I have been working with the advisors to do is to trim our portfolio so that we're not losing any more money than we absolutely have to. You will see though that in general, invested instruments are losing money. That's kind of the cycle we're in the market. So I guess if there's a time for us to need cash and liquidate, this is better than others, I suppose. So if I could just explain for just a couple of minutes the process that we're using behind the scenes. I know that Mike and George are in regular contact about the financial position of the organization, and doing a lot of forecasting cash flow needs. When they get to a point that they are comfortable with their forecast, they usually bring me in, and then Mike and I chat, and then Mike and I have had an initial conversation with the investment advisors, with an overall plan to trim to what our needs are. And then Mike and I are in communication with the investors, investment advisors, and Karen comes in to give confirmation as required for those transactions. So, questions about our invested assets?
So I have a question, Sophie. So in terms of maturities, are we still have stuff out there that doesn't mature for some period of time?
Yes.
How far out are we? Do you know, 6 months or
Oh,
a year?
I think we're further than that.
We have a number of multi-year investments,
Okay,
and again, it's a ladder, so.
right. I thought we had tried to cut that back.
And we have,
Yeah,
But it takes time for them to mature and then. Yes,
Are these investments mostly in individual bonds as opposed to bond funds?
we're mostly in bond funds.
those are almost all bond funds and C, there are a few CDs left, but it's almost all bond funds.
So we're running market risk on those funds if we want to liquidate
That's
for
correct.
maturity.
Yes, that was a change that was needed to do.
Yeah.
Which is again why we're trying to be kind of strategic. And why we probably are not gonna hit our cash to investment ratio that is in the policy. Okay, we good with our invested funds? We have some.
Sorry, Sophie.
Yep.
I'm just adding up the numbers I see in the pie charts. And they are close to what George has in his report. But they're more than you've indicated in your number that you gave us today.
So
Maybe you didn't include the coastal.
I added the 1,000,007.
I'm getting over 5 million.
No, because are you adding these again? So the pie chart at the bottom is simply
Oh, it's
a
the asset
recap,
allocation.
yeah, it's
Sorry.
the allocation.
I
I wish I
I
was wrong.
apologize. Sorry, I didn't see that.
I would love to be wrong about that.
Made my head come up quick.
And just to clarify, between July 1st and later in July, and you see this the letter has recommendations for $100,000 of withdrawal, so that actually happened. So the numbers actually match up quite well when you account for the dates. So we have a very clear trail as often. And maintain our transparency, which has been our hallmark of this.
So George, you gotta speak up because if I can barely hear you, poor
Okay.
owl is gonna,
Very good. Just saying that if you look at the numbers, the balances on July 1st in the letter and on July 12th in the packet, the difference is more or less $400,000, which is what was withdrawn between the 1st and the 12th. And so the numbers do all balance, I think. And if you look at the balance sheet, we also have some receivables and some payables. So the difference between the accrual and cash position explains the rest of whatever difference one might observe. So it's all there as usual. It works, and we're being transparent rather than trying to oversimplify, especially in this time when a lot of money is moving back and forth on short notice, as we mentioned and will be talking about going forward. So
you should- I can count on you for investment questions. Keep going.
Sorry. Looking at cash position and low going forward to the end of the year, do we still feel we have enough to cover those expenses? I know it's tight.
well, you have to look at a couple things. You have to look at some money coming back through the transactions that are contemplated. You do that, we're fine.
Okay.
With without all of it, it's close, but we ought to be okay. I think the other questions is that, you'll look, we have a fair number of disposal costs outstanding. Our members have been great and been paying quickly, but every time there's a cycle, there's a little bit of lag in getting the money in. So, and the more disposal costs there is, the more there's a little bit of lag because those costs are significant. We ought to be fine.
Right, and remember, Bob, the acquisition price has credits that come off of that, and we also have a deposit sit for escrow. That's not. So it'll be tight, but we will be okay.
Yeah, the balance sheet does show the 50,000 down payment. The rest of it can come out of the cash collateral account, which we have not been using for everyday expenses. So that the acquisition money is segregated from the operations money, just in terms of where it is.
I didn't mean that question to sound as contentious as it perhaps did. I just wanted to congratulate you both on the way you've been handling the cash.
Yeah, so I mean,
And really well done.
thank you. No, we appreciate it. And we know that our membership is obviously there. Clearly, the board and needs to know the narrow straits we're sailing through and how much margin we have between each shore. So I think, questions are encouraged and we'll do our best to explain. But yeah, we're keeping our eyes on it very carefully.
Ready to move on?
Yes.
All right, so the next thing that we have on the agenda is looking at our assets, our projected cash flow, and our liabilities, which we do through George's asset management letter, which I know the board is going to take up. This would be an opportunity if we in the finance committee had maybe more specific questions to kind of review it with George ahead of time.
We basically covered the balances. The recommendations are to go forward with $150,000 to cover the distribution, which is shown in here. Another $200,000 to the contingency account, which is basically covering cash flow related to disposal costs, and the $50,000 transfer to the operating account. I will say that I'm a little embarrassed. There's a typo in here on page 3 where it says less, and really ought to say more, but I'll fix that. Basically, the value of the site is probably exceeds what's on our books. It's probably more than what's on our, but we haven't done an appraisal, so we're still looking at quick cost of the total less the value of what was turned over. But the appraised value would probably show that the site has more value because it's now developed, and we just haven't gone through that exercise. That may actually happen as part of the transactions going forward, or we could do that at a future point. But happy to take questions. I think, and a lot of this detail is just confirming what we've said, which is, yeah, we're in narrow straits, but we ought to be fine looking for the quarter and going forward. Again, there's a $250,000 non-refundable deposit associated with the exclusivity agreement. That's not counted in here because as of June 30th, we didn't know for sure that would be received. So there's a little more money out there that helps us. Yeah.
Yes.
Just a note, George, on page 6 at the very top in the first 2 rectangles.
Yeah.
The one on the right where you talk about minimum balance.
Yeah.
Already waived. Isn't that date February 2020?
Yeah, it is. Yes, that's the typo.
Just
Typo.
Thank you.
I will finish that. I will correct that on the Joseph's website.
Okay,
Can I just have one quick question?
you can ask whatever you want, Karen.
So, the distributions to members, we pay those in arrears, correct? So we'll have
Yes.
one more quarter where we'll be approving that final transfer for Q3 of 2022.
Yes, the third quarter and then the month of October, because November 1st was the date that was commercial operation when the test was passed in 2019. So we have the month of October.
So in fourth quarter, we'll have to approve 30 days.
Gotcha. Okay.
Other questions for George? Can I just tell you how nice it is to know how particular our assets are allocated and our members dues, their what is owed to them. I mean, just down to the penny. Yeah. And George frets when it doesn't work out, so we know it's a good thing. So I am going to suggest, which is gonna seem very out of character for me. As irritated as I was with the deal that monkeyed with commercial waste from several of the local, 3-4 of the local communities, which I have been very verbal about that. I think where we are in our place, I would really like to see the MRC go back to the 3 entities that have cash payments pending for this, to see if we could defer paying these particular payments until after we have a better cash flow.
So that's the administration payment that you're talking about, right? That's the.
So this is the commercial tonnage and administrative payment. So that is a total of $41,439.16. My hope is that after the sale comes together and we get reimbursed, we'll have a much better cash flow. And I don't think we should do this unilaterally, as that is what really got at least me very upset last time. But I also think that those entities are at the table and generally supportive and understanding of this process. So that's going to be my suggestion as we kind of move forward, to see if perhaps we could save that $40,000, defer it till later when we have more cash.
Do you think those municipalities budget that for revenue?
Absolutely.
Yeah.
I think they do. I think that our cash is going to improve before the end of the fiscal year, I guess, and I'm hoping that none of those communities are so dependent upon $40,000 that they can't wait a few months. And when I look at the contracts and the agreements, while there could be an argument about commercial waste, there is no guarantee that we will make people whole in the way that we can do, which is why I'm suggesting this might be a place to defer. I would not suggest that they go without. I would suggest that we do. And ask them. Yes,
Are you talking about this distribution or third quarter as your second entry? Because there's only 2 more.
yeah,
So you're talking about this one and the next one. Okay. I just want to make sure.
I definitely agree with the principle, and I don't think that's going, deferring that would break the bank for the city that I live in. But at the same time, we have
Yeah.
to take that back.
that is why I would most definitely ask that we ask. And if they say no, then we can deal with it, but I do think, and I think it should be an all or nothing. I don't want George to be doing simple ones, but an all or nothing, and $40,000 pays payroll a little bit longer. And to me, that's more important.
I would like to also comment, you mentioned that these are gonna stop in a few quarters, and while the loss distribution portion may stop, I think there's still, in my mind, the administrative fees that we're losing out on for the commercial waste, which will never end until the commercial waste goes back to the facility. So I think that's an ongoing issue.
Could we take this issue and refer it to the waste flow committee for discussion, perhaps on a Zoom call, and perhaps the communities might want to be more represented with, for example, public works directors, managers, finance directors, whoever would be the entities to talk about that. So I'm not sure that's ever really gotten an airing other than me being animated at board meetings.
Good idea.
I like that idea. I'd also think it would help to explain why this accommodation was made. I mean, we talk about it fairly often, but I've never really fully understood why on earth we made an accommodation for this. It doesn't make sense to me. Why are they in a special position regarding commercial waste? And maybe that is something the waste flow committee can take up with them. I think it's a good idea.
So, like I said, that would be my suggestion. The potted answer to your question is, I did not understand either as I raged in my living room when I was informed of this. But as explained, in order to make the waste swap agreement work, which everybody agreed was in the best interest of the members, the Pine Tree was given control of the commercial waste on a temporary basis in order to make that work. And it was done without any consideration to the community's flow control ordinances, and all sorts of other things. So I don't understand either. I do understand that when a board empowers people to go out and negotiate and to get the best deal that they can for the entire members, some members win and some members lose, and sometimes you have to take it on the chin. But I think it's time for us to go back to those members in a more holistic way, talk about what the issue is, and talk about how we plan to bring this back to hold at some point in the future. Is that fair? I think I just gave Tony work too, which always makes me happy. Oh, Aaron is in charge of waste
You
and
mentioned public works directors.
Oh, yeah, well. So I just wanted to not have that be a surprise. I do think that we should vote the approval through though, in case they don't agree. We can not have to bring the board back together. So if we're all set with George, the next issue are our financial statements, and really the one that I wanna to have Mike kind of walk us through is his. So in the packet, there were revenue and expense that were clearly an Excel spreadsheet, very colorful. You want to just briefly walk folks through that?
Yeah, so this is the second quarter reconciliation of the 2022 budget. It's pretty self-explanatory. I'll go over a couple things on a high level. I mean, revenue is at 60%, so that's pretty much right where it should be. We had to move some money over. On expenses, we're at 58% of our budget going 6 months in, so we are 8% higher, but we do have a few expenses on here that are paid on an annual basis. So I really feel confident that we're okay on our expenses. We are running over on securing the facility. There was a change made to the health insurance and our legal expenses. But we've been able to cut back in other areas to keep things on track. So between revenue, and expenses, I don't think we're too far off, and being at 58%, I'm not overly concerned at this point right now due to the, some of these expenses that have been paid on an annual basis. Is there any questions on the reconciliation of budget? Karen?
On the expenses to secure the facility, are we expecting to get reimbursed 100% through the sale, through the credit? Is that?
Those are not in the, so those expenses don't, this is just our operational budget. Those, the power, but yes, so all the agreed upon utilities, taxes that we paid will be coming off to the purchase price at the time of the acquisition.
That's not, those are not included in that 185.
But we worked on, as we work on, negotiating potential partnership, some of these expenses have been working.
So the one expenditure I would want to highlight is the audit. The audit was a lot more complex than had originally been scoped. Donald had to do an awful lot of tracing many more transactions than normal because he was also auditing the waste disposal payments and revenues coming in. So we got the bill for that and it was significantly higher than what we would have expected. So we booked as much as we could in last year. But we would expect again, a higher audit. And we're probably gonna end up not as high, but higher than it has been, when you're talking about a handful of quarterly transactions and payroll versus waste flow payments, and then accounts payable activity to members and accounts receivable. Accounts receivable from members, accounts payable for disposal. It's just gonna be a lot more complex. So we're gonna want to keep that in mind as we move forward.
So are we expecting another payment to the auditor in this fiscal year, this calendar year? Or will it, not really, actually?
We will probably have a progress payment. So we have not, the goal is for us to have the books to him closed and ready to be audited by the end of August.
So we still have to do 2021, but we're back on track for the 12 months.
Sorry about that, I forgot.
Yeah,
So I plan on Georgia,
Yeah.
all of Georgia's stuff's in. I'm arranging my waste payments and meetings with Lita, put everything. And then we'll give all that to Donald. My hopes is to do that end of August 1st. And then in 2021 we'll be right on track.
Yes,
Yeah.
I
So,
missed the year there, yeah.
the one thing I would say about schedule is that to the extent that there's a loan closing for third or fourth quarter of 2022 by our potential partner, our audit will probably need to be part of that closing work. And so we should try to accelerate that. So we're done by the end of the quarter, if that's at all possible.
that's a big jump to take on.
Again, we don't know what the timetable is that, and it might be, further on in fourth quarter, but let's keep an eye on the schedule.
Are you saying a closing with the potential, we would have to have that done prior to the closing with the potential partner?
I'm just suggesting that since the credit rating or the credit worthiness of the MRC, which is pushing all the tip fees into the project, so it's a major source of revenue, is going to be of concern to the investors. They're going to look to the MRC for audited financials, and we don't want to be too far behind in providing that assurance. And part of that, in my own mind, is last time around, the MRC was asked for extra security, which ended up being more complicated than we preferred to deal with. And it would help us to have that audit done to avoid that need for extra security.
But I just want to make sure we're talking about the same thing. We're talking about a possible acquisition closing in September.
Right, we're not talking about the September acquisition, we're talking
Thank you.
about the.
That's where
Phase
my
two.
mind's going.
No,
I'm like,
okay,
there's
yeah,
no way.
no, no, no.
There's no way. It can happen.
No, this would be,
Let's talk about it now.
no, this would be about for phase two, not phase one.
Okay, thank you for that. I have September 7th in my mind going.
Yeah, no, this is not gonna be happening by September 7th, but we ought to be well on the way.
I understand.
And it would be terrific if you could shoot for the, say, the October board meeting. That might be optimistic, but.
Okay, I
At least
understand.
if we're underway by then. That would be good.
Okay.
Yes.
I guess I'm not sure why that should be an issue if we're accruing and recognized at appropriate times. That's reflected in the statements that are audited. It's all
agree.
there. Why would anybody question?
Well, they questioned it last time, and I think, I think we're just, you can't be too careful, is all I'm saying. And I would not want a delay on our part to hold up any action. And I think maybe it's an abundance of caution, but let's just keep an eye on the schedule to make sure that we're not the ones who are on the critical path. So I think that's really the sentiment. I don't want to overstate it, and you're right, and, there are lots of reasons why it shouldn't be on their list, but it will be.
So, if we wanted to move forward, can we talk about payables? Mike would like us to get some bills paid. The good news is if you look at these, he's done a really nice job holding our vendors' feet to the fire to provide timely invoices, which has been an issue in the past. So, with the cell phone bill that has already been paid through an automatic payment, the total bills payable corrected is $64,136.85. So the addition is travel expense of $1,563.54. That is for an entire quarter. My hunch is it's not September to December. My hunch is it's probably April to
Your hunch is right.
June. And that office reimbursement for office expenses of $504.79. So questions about the payables?
I just want to add real quickly that, there's a payable packet that goes to the treasurer. There's a mileage report in there and receipt for all
Oh,
these
yeah.
expenses. So,
Yeah. No questions? So my assumption is we're recommending it. So that I think ends my portion of today's program. And I think we will go back on mute and pause the meeting until 10 o'clock. Thank you all.
So,
Thank you.